Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. And, I work with investors from all over, in the United States, outside the United States. And sometimes I think one of the problems that we have is what's called unreal expectations. I wish it was a perfect world. I wish that you closed at 10 o'clock and your tenant moved in at 1 o'clock and it never stays vacant. I wish you never had any kind of problems where you had to put money into the house. I wish you could get $2 a square foot. Wouldn't that be fantastic? Because I'd be buying even more property in the Oklahoma City and Tulsa market if that was the case. So I think it's very important that we understand that, perfection is not there. But also I'm getting folks that are, contacting me and saying, hey, I want to offer 20% off on all the properties that you can show me. I want you to do all this work for me, and then what we do is do 20% off. Well, that doesn't work for us. We don't do that. And one of the reasons we don't do it is a waste of time for both of us. Right now, it's pretty much a list price world. In fact, if you look at the statistics from last month in Oklahoma City, it actually was a situation where the average sale was over the listed price. Now that's kind of adjusting a little bit, but there is no 20% off in Oklahoma City. It just does not exist. Now, one of these days, maybe we'll get back to a foreclosure market. Who knows? 5 years, 10 years down the road, who can predict, what might happen in the future? But as of the last 20 years, 21 years, it hadn't happened, so a little bit of short sales after 2008, but nothing compared to the rest of the United States. So when I do a return on investment analysis and I'm seeing 8 to 11% cash on cash return, or I'm seeing a annualized return of 16 to 18%, over a 7-year period, and somebody says, well, I want more than that, then I have to ask someone, well, do you really think you're going to find this property anywhere? It's a little bit pie in the sky. So, the thing that's very, very important is that you understand that investing in real estate is a long-term affair. In other words, I've got investors from 2000 on that still own their properties. And the reason why they own their properties is because they're paid for at a certain point, and they're cash flowing still. And yes, they put money into the properties from time to time to repair things. Yes, they have some vacancy, although our vacancy is running at about 3%. So what we're going to try to do if we work together is set some real world standards. And I'll be happy to compare that to other markets because, I've been in seminars and webinars where I guess you could say I'm in competition with North Carolina or Florida or Texas or Louisiana or Kansas or wherever. And I know the differences. I'm not saying those are bad markets, by the way, but I know how to compare what we do. And so we'll get together and we'll set some real expectations so that going in, you're not deceived. Going in, somebody doesn't just float this pie in the sky to get your money. I'd rather not do that at all. I'd rather give you honest answers that have you set those expectations as to raise the bar this high, but then you only get this much. It's a bad idea.